Good morning, this is the latest market news. I'm Uliana. Japan looks set to be Asia's best performer of the week, as regional stocks rose on Friday before the US labor report and following supportive comments from the European Central Bank. In terms of weekly performance, Japan's Nikkei made the biggest gains. The index was up 4.1% week to date, its third consecutive weekly upward move, recovering from the sharp correction that pushed the market into bear market territory last month. On Friday, with the US closed on Thursday for the Independence Day public holiday, Asia took its lead from Europe, where stocks jumped after the European Central Bank indicated that rates will remain at low levels for the time being. The Nikkei climbed 1.6%. With the US on holiday yesterday, markets were left to trade on reduced liquidity as dovish comments from the ECB sent the euro lower and European equities higher. Concerns over Portugal and Egypt kept investors cautious, but the focus was squarely on Draghi as he used his press conference to commit to interest rates remaining low and even suggested they could be lowered further if required. This has continued the recent theme of the US Fed hitting at tightening, while other central banks around the world begin looking at further easing in order to support their economies, as they face the prospect of the end of cheap money from the US. The euro was trading just below 1.3 prior to the release and quickly fell to a near 5-week low against the greenback at around 1.2890. After yesterday's US Independence Day holiday, and with both the Bank of England and the European Central Bank moving toward guidance, today's US employment report will be closely watched for hints on if and when the Federal Reserve will start decreasing its monthly asset purchases. US June employment report 12:30 GMT. Non-farm jobs are expected to increase by 160,000 after May's increase of 175,000. The unemployment rate is expected to nudge slightly lower to 7.5% from May's 7.6%. A good number would mean that tapering is closer, which would hurt asset prices, while a bad number would imply the opposite. It was the latest market news provided by ICO FX. Goodbye.